what's some advice that you're giving your clients now?
For my clients, I think one of the main things is, listen, whatever rate we get now, it's a correlation to the payment. So it's, can you afford the monthly payment? Is that something you're okay with paying? And if you are, then let's go, because you can always refinance. If you're okay with making the payment now, the hope is that, and again, whether it's a year, 2 years, what have you, we'll be able to refinance, get a lower rate, and then lower their monthly payment. But you can't let just the rate itself dictate whether you're gonna buy or not.
I give the same advice. What I always say is I don't think the interest rate should be your reason for purchasing a home. I think you should have a bigger why. And it's usually something along the lines of growing family, or the opposite, empty nesters wanting to move, big life changes, wanting a better quality of life, something along those lines. That's why you should buy. And what the rate is like, you just kind of work with it. If you have to get a little bit higher rate, hopefully we can get you a more aggressive price. And then like you said, when the time comes, we'll talk to Scotty, we'll refinance, and you'll have the best of both worlds. But I think that people hear the news about interest rates, high interest rates, and they end up on the fence. And then they're continuing to pay rent. Their rent is continuing to go up. And then at the end of the day, they're missing out on equity. They're paying their landlord's mortgage, and they're not getting like that elevated quality of life that they would have if they just bit the bullet, got a higher interest rate.
Same thing, I hear it all the time from clients is, Scott, I'm gonna wait. The market's not good right now and rates are so high. This is also, these people are saying this they don't understand the context of where home prices are, where they've been, and same with historical average of mortgage rates. I mean, this is just kind of fear mongering that they hear on the news, or their neighbor or somebody's telling them like, oh, it's not a good time to buy because rates are so high, and it is what it is. That also leads me into the whole, where right now, from an inventory standpoint, we're very low on inventory. If you're gonna buy something now where a home is, let's say, $500,000 and rates are at 6.5, but you're saying, I'm gonna wait until rates come down into the mid fives. Who knows when that's gonna happen, number one. Number two, by the time that happens, that house that you could have bought today for $500,000, that house is gonna be worth $550,000, maybe more. So you're gonna sit on the fence when you could have got that house, built that equity. If you can manage the payment, that's great, and you can always refinance. But if you're just playing the waiting game for interest rates, maybe you shouldn't be buying.
It's the same thing that I kind of see, on our side with buyers.
And then I'm sure you hear it too, is I get buyers saying, well, I think prices are gonna come down. I'm waiting for the market to crash. I think that values are way inflated.
In my opinion, that person's not really a buyer. That's someone that wants to take advantage of a market or time the market. Usually doesn't work out. You end up sitting around waiting for something to happen, and then while it's happening, you're waiting for something better, and you always end up missing it. The saying is, time in the market is better than timing the market. That's true. It's cliche for a reason.
Right. And also you have to understand, what's your geographic region? What's your local market? Because the market here in Chicago versus, let's say, a market in California or Austin, Texas, or Nashville, or areas in Florida where you had home prices appreciate at insane levels. Those areas, yes, prices might be coming down a lot more than you'll see in Chicago, where here in this market, I would tell you that we maybe don't see those crazy high levels of appreciation, but then we don't see those lows. We don't see, crazy deceleration in values as well. So it's one, it's understanding what market you're in. And then number two, when these people when they're waiting for prices to come down, and like we've said, it's a strict sense of supply and demand. It's economics 101. There is way less supply than there is demand. There's a higher demand. We're not gonna see, in this environment, we're just not gonna see prices come down that much. So it's better to get in now, and again, as long as there's low inventory, prices will remain at their levels they are, and more likely than not, they're gonna appreciate.
Yeah, it's almost the opposite. Like, we're seeing prices still go up, and that's just because supply is so low. Like, it's not like, oh, it's kind of low, but there's a ton of demand. I think demand is relatively low, but when you look at it compared to supply is just so low that it's like anything that drives demand a little bit, whether it's seasonality, whether it's a headline or a downtick in market rates or whatever it is, it just becomes competitive.
And we're forgetting now, if market rates come down, rates lower, affordability is higher, that's going to lead to a bigger buyer pool. It'll free up some inventory, so you get a lot of people that are sitting on rates in the 2s and 3s that don't want to give up their properties, understandably. But eventually, as rates come down, some of those people will eventually sell and kind of free up their properties. But once rates come down, affordability goes more, gets greater, you're gonna see a bigger buyer demand, and then we're gonna end up where we were a year or two ago, which, I mean, if you remember, every time you were offering on a property, there were 8, 9, 10 other offers, and you've got buyers that are literally, they're losing out just time and time and time again because it's
How could I
such a
forget?
competitive market. Right. So
Yeah.
I think buyers forget that sometimes, or they don't understand that maybe it's good to get in now, given the situation, versus when the demand is just at an all-time high and the competition's out of control.